What's up, everybody? Welcome to the February 23rd, 2026 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indy Wealth. Today, we're going to get right into those hot button market issues. So let's get going. First off, we had some interesting tariff updates this last week and into today. Tariffs were struck down by the Supreme Court, at least the method which they were used before. I'm not going to go too much into the weeds because, frankly, that's a lot of mumbo jumbo that we don't need to worry about. But what we do know is there is now a limited power of President Trump to basically provide tariffs in the same way he was doing prior. Now, why I'm providing you a little bit of language on this is I put tariff struck down, then rebuilt. So immediately after, there was some diatribe and all that stuff, and then he used a different method to put a 15% global tariff on. Really, all this means is that, again, we're back in flux of tariffs. The market doesn't seem to be reacting too aggressively to it right now. We're down a little bit in the morning. I think we've just grown a little numb to this, which is weird because global trade has an immense component of what we do from an economic perspective, what we do, how much our goods cost, all this stuff. It has a really immense pressure on the overall economy if you have uncertainty with regard to what your input costs look like and you're a business. I think there's just been a level from a market's perspective of just, we got to deal with the uncertainty and we'll figure it out down the road. And we're going to concentrate more on companies than that. Because the reactions haven't swayed as much. If you remember April of last year, there was a massive, almost a bear market as a result of it. It was near 20% decline. Subsequently, we've seen some ups and downs from tariff-related talk, but I think those ups and downs have been getting less and less and less and less. So the market doesn't seem to be reacting aggressively. We'll see where all of this shakes out. We'll see what the new deals are. We'll see how much power he actually has to implement the things he wants to implement from a tariff perspective. But really trying to put an assessment of here is what this will cost, here is what the impact will be, and here's how the market will react. Extraordinarily difficult right now. And I think you're even seeing the market participants saying, I don't know, so we'll just kind of stay the course. Turning to number two, PCE versus CPI. That's inflation data. So you have two different methods of inflation measuring. You have the CPI, which is the consumer price index. And that measures a component of inflation. And then you have the personal consumptions expenditure. That's the PCE index. I'm not going to I don't want to get too far into the weeds and bore you all to death about what these differences, what the big differences are and all that stuff. Just know that these are two different measures of inflation. And sometimes they can tell you two different stories. So turning back to last week, I had said CPI. The last report was a bit of a Goldilocks report, right? We weren't aggressively rising from an inflation perspective. We weren't down to normal territory yet, but it was better than expected. Now, PCE data, the latest data that came out, not so hot. That one was a little bit hotter. That came in with an accelerated number that was worse than expectations. So again, on a month-to-month basis, this stuff can fluctuate. You never know perfectly which assessment. But what you do know is that the Federal Reserve tends to look at PCE more than CPI with regard to their decision-making on inflation. And so the fact that the PCE number was a little worse than CPI and you started to see a little bit of acceleration there probably lends more credence to our assessment that we've been talking about all year, is that the Federal Reserve is probably in a period of stasis with regard to interest rates. I don't believe, especially if we're seeing even just a slight acceleration in PCE, and again, one data point does not make a trend, but even if you're seeing a slight PCE acceleration, it's going to be very difficult for the current Federal Reserve to say, well, we can cut rates during that period of time, because cutting rates can exacerbate inflationary trends. And so if they're going the wrong way and you cut rates, they could go the wrong way faster than you want them to. So being that their dual mandate is controlled inflation and jobs, I just really have a hard time right now, given the economic picture that we're seeing, about them being in a massive cutting cycle until we get a new Fed governor, which again is going to be under significant pressure because they will be nominated by President Trump to enact a rate cut in the future. So we'll see what the second half holds, but I really think all the data right now is telling us that the Fed isn't going to move. And so interest rates probably going to fluctuate more on economic activity than they are on Fed probability of cutting or moving their number at all. Turning to number 3, we had Walmart earnings last week. The numbers were generally good. Their comp numbers are they're growing pretty well. I think in the 4% range, if I'm not mistaken. But what was interesting to me, what I took out of the earnings call from Walmart, is much more of their conversation about how they're trying to swim upstream. That their higher income consumer is spending more at Walmart than they have historically in the past. And I said this, at our prior position, we had a podcast there, and we were talking about it a year and a half ago at this point, almost 2 years ago at this point, in saying that Walmart, among the higher income, because of their delivery, because of their logistics, have provided an opportunity for themselves to swim upstream and not be considered just solely the purview of the mid to lower tier income household. Is that mid to upper tier is spending more at Walmart because the comfort and capability of their delivery system, their logistics, their pickup, along with the prices, are saying, hey, this is probably worth taking a shot at. So I think that's the biggest reason you've seen Walmart go from mid, 16, 17 times earnings to now over 45 times earnings, which again, I think is crazy. We don't own Walmart here. I think that's way too expensive over a longer period of time. I think it's going to be tough for them to accelerate from here, and especially on the earnings front. But from the company in and of itself, I think that's what you've seen as the biggest wave and the biggest sea change, is that people are saying, well, this is now serving a broader swath of the overall economy. They're already massive and serving a lot of people. But if they really have a chance to get that market share among that mid to higher tier consumer, which is the one that's spending more aggressively right now, then their growth might be more sustainable over a longer period of time. I think that's what the argument that the bulls in Walmart would tell you. And we'll see if that happens. I think right now it's really difficult to justify given the valuation, but certainly could continue to happen if they continue to accelerate. Turning lastly to number 4, I'm not much of a hockey guy. I'm much more of a basketball guy. So when, in the next couple of months, you'll probably start to hear me talk more about basketball in my personal opinions here. But you gotta give a shout out to USA Hockey for winning the gold. First time since 1980, so 46 years in the making. It was an incredible shot. It was very cool from that. I don't watch much hockey. I don't know the game, so I don't pretend I do, but I do know when I see cool stuff. And it was very cool to see both that goal, because it looked like it was going the other way. It looked like Canada was going to have an advantage, and that just a little poke away turned it completely, scored the goal, won the game. So very cool. Congratulations to USA Hockey. Long time in the making. Very glad that they were able to take home the gold. So that's it for this week. Tune in next week where we'll have our next hot button topics. But until then, thank you very much. Take care.